Stocks recover after opening sharply lower as traders digest weak global cues. Realty and industrials lead the fall, while energy shows resilience. The government slashes windfall taxes on oil produced as well as refined products like diesel and aviation turbine fuel, boosting stock prices of producers like heavyweights ONGC and Reliance Industries. Deepak Fertilizers gains after it unveils the demerger plan for its mining and fertilizer businesses, while GMM Pfaudler gets drubbed after its overseas promoter initiates a sale of most of its over 30% stake. And Nava gains after it tells CNBC TV18 that it expects to make $227 million from the Zambia Electricity Supply Corporation, while Hindustan Foods' decision to acquire Reckitt's Himachal unit gets a thumbs up. The November goods trade deficit comes in at a six-month low of $23.8 billion, even as exports recover from October lows. Hi guys, a very good afternoon and welcome to Business Lunch. I'm Pavitra Parekh. Those are all of the headlines that we are tracking this afternoon. It has been all about the market action today. We saw a sharply lower opening. We saw that big fall around 11 o'clock, and then there has been a sharp recovery from those levels as well. So right now we're almost at the flat line. It's absolutely flat, just around 10 points lower on the Nifty. In fact, the banks, the mid-cap index have also staged quite a recovery. So the mid-cap index was seeing a significant underperformance. It still is, but there has been quite a recovery from the lows. So the mid-cap index now around 0.9% lower. At the lows of the day, we were seeing a near 2% cut on that one. The Nifty Bank has also recovered a lot. It's just around 0.2% in the red, and most of the pain is still coming in from the PSU Bank Index. Like you can see, that one is down 1.3%. So that's what's happening in terms of the, the main market indices. If you take a look at a more sector-specific level, metals is the only sector which has now moved into the green. So the likes of Tata Steel, JSW Steel, I have a few on your screen, all of these holding up quite well. And of course, energy is doing well on the back of what's happened with the windfall taxes. So keep your eye out on Reliance, on ONGC. On the downside, it is some of the banks, like I mentioned, and auto, which is bearing a brunt, a major brunt of what's going on with the market. So that's what's going on with the market action. We'll keep coming back to this. But first up, let me bring you, some important stock-specific action that we are tracking. Deepak Fertilizers has announced a demerger of its mining and chemical fertilizer businesses. Sonal is here to tell us more about that. Sonal?
Thanks a lot for that. Yes, it is an important update that has come in from Deepak Fertilizers. They have planned or announced demerger of their mining chemicals and fertilizers business. Now, just to give you some perspective, because there are two transactions which are taking place here. There are two subsidiaries of the company, STL and DMSPL. STL is the one which houses both the fertilizers and the mining chemicals business. Now, from this particular subsidiary, the mining chemicals business, that is the TAN business, will be demerged into Deepak Mining Services Private Limited, which is DMSPL. The second transaction which is happening is amalgamation of Mahadan Farm Technologies Private Limited, which is a wholly owned subsidiary of STL, into STL. Now, of course, the first one is of a bigger importance, and that's what the stock is reacting to. In terms of their mining chemicals business, it is a sizable chunk, almost 2,400 crore rupees in terms of revenues. That's 44% of the total revenues, and that is the one which is getting demerged. The demerger ratio is at 1:1. Now, a couple of reasons why the company has gone ahead and announced this demerger. First is simplification of corporate structure. Two different businesses, so they are planning to demerge it. Economies of scale. They also talk about restructuring in line with their plans of moving away from commodity business to specialty business, and that's something that they have been very vocal about as well. Unlocking growth potential of each of the businesses, because they both are different businesses, one fertilizer and one chemicals, and that's the reason why they have gone ahead with this particular decision. It was not very expected, so to say, so it's come as a surprise, but definitely a positive surprise taken positively by the company. We'll have to see whether these two businesses will be listed separately or not. That is something we'll watch out for.
All right, we'll watch out for that. But for now, the street definitely likes the sound of this, 2.5% higher on Deepak Fertilizers. The next stock that we're tracking is Nava. This is erstwhile Nav Bharat Ventures. It is in focus as subsidiary MCL has reached an agreement with Zesco in a long-standing arrears dispute. CFO Sultan Beg, in fact, told us this morning that money due to MCL will come in tranches slowly by August of 2023. So let's listen in to what he had to tell us.
This is a consent award issued by the International Arbitration Tribunal based in London, not in Singapore. By means of a consent award, it means that both the parties, MCL and ZESCO, got onto the table, agreed on bilateral terms, how the debt will be disposed of over the next course, and approached the tribunal to issue a consent award. So it cannot be challenged further because the parties bilaterally agreed and reached an agreement, and which the tribunal issued in the form of an award. As per the settlement agreement, it will come in tranches, and ZESCO has agreed that the entire money will be settled to us by end of August 2023. Out of the 518 millions, about 70 million will go towards the payment of VAT liabilities to the government of Zambia, which we believe that ZESCO will directly pay off to ZRA. And from the balance of 47 million, we have an outstanding principal due to the lenders, which has not been paid since about 3 years. So over $220 million would go for the repayment of the outstanding overdue principal amounts to the lenders. Balance amount is available with the company, and the board will take a suitable decision when the right time comes for the utilization of the funds, either in terms of the payout to sponsors or conserving cash for further expansion.
All right, 11.5% pop on Nava after the 8.5% that we saw yesterday. So the street definitely liking this, and a big overhang has been lifted. The next one that we are tracking is Creditaxis Grameen. This one is under pressure after MD and CEO Uday Kumar Hebbar told us that the promoters may offload around 10 to 12% stake in the company over the next 2 to 3 years. Let's listen in.
Promoters might sell about 5% per annum for at least in the mid-term total, not more than 10 to 12%, to give a liquidity to the old shareholders who have been invested and patiently with us, with promoter for more than 15 years. Our intention is to, promoter intention to reduce not more than 5% in any financial year, but not more than 10 to 12% overall in the medium term. But yeah, it will take step by step, not immediately.
Okay, promoters may offload stake around 5% per year. That is the word coming in, and that is why Creditaxis Grameen is under pressure. With that, we're going to get into a short break now, but you don't go anywhere, because when we come back, we're going to talk about the November goods trade deficit, which is coming in at a 6-month low. So all of the details after this short break. Hey guys, welcome back. You're still tuned into Business Lunch on CNBC TV 18. And like we told you, India's monthly merchandise trade deficit has come in at a 6-month low of $23.81 billion. This thanks to a recovery that we've seen in exports. In fact, India's overall trade deficit counting goods and services has also fallen to $11.11 billion, which is lower than a year ago as well as a month ago levels. So Lata has more on this. Lata, good numbers.
Yes, the trade deficit coming down to $23 billion is very important. It's the lowest in 6 months, as you said. The exports have gone up to 31.9 and nearly $32 billion. And that, as you can see, is much higher, about $2.5 billion higher than October, and of course higher than year-ago levels. But let's not run away with it. Even at 31.99, it is the lowest since November 2021. So we have to catch up. We are still struggling with lower prices and volumes because of recession in destination countries, but better than October. The goods imports also have come down in November. That's also helping a lower trade deficit. Imports have come down to 55.88 billion compared to 56.69 billion. And no, it is not because of crude. Other imports have gone down, which is very good. So that's why the November trade deficit will come up for you, 23.8 billion compared to almost 27 billion in the previous month, and just a little worse than the year-ago levels. The important part is that the deficit is the lowest in 6 months. Mind you, we are all worrying about current account deficit, so this number is welcome. We must not look at goods in isolation. You have to look at goods and services, because India is a big software services exporter. So we look at goods and services. The exports are at 52 billion, a tad lower than what it was in October and what it was a year ago. So that may sound a bit discouraging, but the important part is goods and services imports has fallen drastically. From about 73 billion in October, it's down to 65.5 billion in November. So that has also helped narrow the trade deficit. So short point, the goods plus services deficit is down to 11 billion compared to, look at that, almost 15 billion in October. So that's a very big positive, 4 billion less than what it was in October. it's a twofold advantage. One, goods exports are growing, and two, services import bill has fallen. Now, there is still a gap, but this gap of 11 billion a month will be filled largely by remittances, which are, coming hand over fist. So it looks like now the current account deficit will not be such a huge problem in the coming months.
All right, Lata, thanks a lot for getting us all of the highlights from the trade numbers this time around. But with that, let's also talk about the big news that came through this morning. The government has cut windfall gains tax and duty ahead of the scheduled fortnightly review. So tax on crude petroleum has been now reduced to 1,700 rupees a ton. This is from the 4,900 rupees that we had earlier. The levy on petrol will continue to be nil, while duty on aviation turbine fuel has been cut to 1.5 rupees a litre from the 5 rupees a litre that we had earlier. So that's an important update to track. And of course, on the back of that, you have all of the oil names which are doing well, the likes of Reliance, ONGC, Oil India, all holding up well. But another update that we are tracking is that the group of ministers formed to decide the imposing of GST on online gambling as well as, on casinos has failed to arrive at a consensus. This leaves the matter to the GST Council now, which meets this Saturday to take the final call on this. So Timsy joins us with the details. Timsy, no decision yet on this.
Well, that's right. The much-awaited GOM report on online gaming, casinos and race courses has finally been submitted by the convener, Conrad Sangma. And what sources are indicating that the report has failed to arrive at a consensus. The GOM has failed to agree if 28% GST on gaming or gambling activities should be levied on the full face value of bets placed or on GGR. GOM leaves it open for the GST Council to take a final call on taxing online gaming, casinos and race courses. Also, very clearly, GOM has proposed that there could be a possibility where a special mechanism to carve out an escrow account for race courses and online gaming can be examined. GOM has proposed that if this proposal is taken forward, then the escrow account can contain a pooled prize money for payouts to winners. And it has further proposed that money collected by race courses and online gaming sites towards commission and platform fee can be segregated via this escrow account setup. And let's see, once the segregated monies at race courses and online gaming sites have been done, it will also help in easy tax administration. But yes, as of now, it has been left open because none of the member states could actually arrive at consensus on any points, be it the 28% taxation or the valuation mechanism for any particular activity, be it online gaming, for casinos or for race courses. So all states have divergent views. Not even a single state or two states have come on common ground. Let's see what happens finally when the GST Council meets and takes up this report.
Hey guys, welcome back. You're still tuned into Business Lunch, and as part of our Outlook 2023 series, Prashant caught up with S. Narain, Chief Investment Officer at ICICI Pru AMC, to understand how he expects the market to behave in the next year. So let's listen into that.
If you look at the last month, what we saw was that debt index fund have received huge inflows, and that's something which possibly as a product didn't exist 2 years back. So I think clearly we are seeing a situation that people will consider debt and SIP, both, and that will be the change which we will see in 2023. I think the big call will be that inflation will become much smaller as an issue in 2023. And therefore, we are in a situation where multi-assets become very interesting, that you consider all the asset classes. You consider a product like multi-asset, which can invest in debt, equity, gold, silver, REIT, InvIT. You can do everything. Because I think that kind of an asset will become much, much more interesting, because you're still going to have a volatile year ahead. So large caps became the area where bulk of the selling has happened this year. So large caps became the area where valuation comfort is there to a higher extent. Mid cap and small cap, the mutual fund industry ensured that there was continuous SIPs. So that area has seen virtually no selling. So those areas, the valuations are not cheap. See, you need some wave of selling for the valuations to correct. And there has been no wave of selling for years now. So, and retail was also positive. So that's not an area where we have seen any selling. Once you see selling, the sector's valuations correct. So that's why we prefer large caps over mid caps and small caps.
All right, that was an interesting chat with S. Narain, but from one exclusive conversation to another, we want to be the leading wealth manager in India. That is the word coming in from Nuno Matos, who's Global Head of Retail Banking and Wealth at HSBC. Speaking to CNBC TV 18's Yash Jain, he also said that HSBC will continue to double its investments in India as he charts out the company's India growth plan. So let's listen in to that chat.
India is receiving a lot of investment from HSBC and will continue to double every year. We continue to make more and more investments to grow our presence in this market. On the wealth space, well, I'm just going to remind some of the things we are doing. We just acquired L&T Investment Management, right? That brought us more than 2 million customers just to start with. And we are going to continue to invest in that asset management business. We are going to launch in 2023 private banking in India. Okay, so that's a big event for us. We are going to deliver best-in-class services, best-in-class products. On the insurance side, we want to continue to grow our presence in this market. And we continue to improve our platforms and products for customers. This is on the wealth space. We want to be the leading wealth manager in India. We are also, if you want, increasing our presence on the lending side. We continue to improve our credit card business, our personal loan business, and our mortgage production continues to grow by the day. So these are two very critical areas for us to continue to invest and grow, and you should expect an HSBC much more visible in the market, much more proactive.
That is HSBC talking about their India growth plan, saying that they're going to continue to double their investments into India year after year. But with that, let's talk about the FIFA World Cup. Only a final few days are left and the tournament draws to a close with the finals between Argentina and France on Sunday. CNBC's Dan Murphy gets us the preview of the finals and also tells us how Qatar has fared as a host nation in the light of intense scrutiny over human rights. Dan. All right, Dan, thanks a lot for getting us that report from Qatar and telling us how it has fared as a host nation. And also, we're, of course, waiting for the finals that will take place on Sunday. But with that, we're coming to a close on the show. The market has slipped a little bit after, being completely at the flat level when we were starting. So it's a 50-point downtick that we are seeing on the Nifty. The mid-cap index seeing an over 1% fall right now. Thanks a lot for tuning into Business Lunch. Mid-cap radar comes up in 2.